Hey everyone, it's Julie here with TipRanks, and today we're taking a look at 5 strong buy dividend stocks for March. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. The month of March has arrived, and that means it's time to take a look at some dividend stocks with ex-dividend dates in this coming month. That ex-dividend date is the day you must own a stock buy in order to be eligible for that next dividend payment. So with those dates coming up soon, it means you're not going to have to wait long to start collecting that sweet passive dividend income. On top of those upcoming ex-dividend dates, today's stocks also come in with a strong buy consensus from Wall Street analysts. So we're going to take a look at these companies, what it is that they do, those dividend details, and of course, what those Wall Street analysts are predicting for the stock's future. We found these stocks using the TipRanks dividend calendar. Found under the dividend menu or under the tools menu under calendars, with the dividend calendar, you'll get a list of all the companies with upcoming ex-dividend dates. You can sort by day and add in other filters. In this case, we put in a strong buy analyst consensus. You can follow along with these stocks over on the TipRanks website or right on your TipRanks mobile app, which you can download by scanning the QR code on your screen or following links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these 5 strong buy dividend stocks for March. Starting with our nearest ex-dividend date, we're taking a look at Hancock Whitney. They trade under the ticker HWC, priced at $56.65. The stock has climbed over 33% in the past year, and the last 3 months is down slightly at nearly 4%. Hancock Whitney is a financial services company offering a variety of banking and investment solutions. Headquartered in Mississippi, they have branches in Alabama, Florida, Louisiana, and Texas, offering personal, commercial, and private banking, as well as asset management, trust and investments, and wealth management. Hancock Whitney has been paying a consistent dividend for over 30 years, and over the last 5 years has a dividend growth rate of about 6.8%. Their current quarterly dividend comes in at about 45 cents per share for a dividend yield of 2.67% and a payout ratio of 28%. Their ex-dividend date is March 5th for payment on March 12th. And they shared their fourth quarter earnings report back on January 21st, coming out with both an earnings and revenue beat. They reported Q4 earnings per share of $1.40, beating expectations by 12 cents per share, while revenue came in at $367.5 million, beating estimates by $2.3 million and growing 18% year over year. Their stock has 6 current analyst ratings and does come in as a unanimous strong buy. The average price target comes in at $70.50, implying an upside potential of over 24% from current prices. Looking at the price targets down below here, they are all fairly closely grouped together, with our low end being $68 for an upside of 20% and our high end being $74 for an upside of over 30%. Second on our list today is Bank of America. They trade under the ticker BAC, currently priced just above $45 per share, having climbed about 34% in the past year, also slightly in the red the last 3 months, down nearly 4%. Bank of America, of course, is well known as one of the largest financial institutions in the United States with a presence around the world. Serving approximately 68 million customers, they leverage their scale to support everyday financial needs and complex corporate transactions globally. They operate through 4 main segments with their consumer banking, global wealth and investment management, global banking, and global markets, which handles trading and investment banking activities. Bank of America has dividend payments dating back over 100 years. Now, continuous payments were interrupted during the financial crisis in 08-09, but they've maintained a consistent dividend since 2011, and over the last 5 years have a dividend growth rate of 8.6%. And their current quarterly dividend comes in at about 26 cents per share for a dividend yield of 2.27% and a payout ratio just under 31%. Their ex-dividend date is March 7th for a payment date of March 28th. They also reported both an earnings and revenue beat for their fourth quarter, which came out on January 16th, plus provided some upbeat future outlook. Their fourth quarter earnings per share came in at 82 cents, beating expectations by 5 cents per share, while revenue came in at $25.3 billion, growing 15% year over year and beating estimates by $170 million. Their stock has 19 current analyst ratings, coming in as a strong buy with 17 buys and 2 holds. And analysts' average price target comes in above $53 per share, implying an upside potential of about 16.6%. Looking at those recent ratings, on the low end, we do have a hold here at $49, which would be an upside of 7.7%. Right next to it is our high end at $59, which would be an upside of over 29%. Now moving away from the finance sector for our third stock, we have Coterra Energy. They trade under the ticker CTRA, currently priced at $26.75. In the past year, they've climbed 7% overall. In the last 3 months, up very slightly at 0.1%. Coterra Energy is an oil and gas company based out of Houston, Texas. Operating in the Marcellus Shale, the Permian Basin, and the Anadarko Basin, they develop and produce oil, natural gas, and natural gas liquids, operate natural gas and saltwater disposal gathering systems, sell natural gas to industrial customers, distribution companies, and more, and provide a reliable supply of oil and gas to meet global energy needs. Now, Coterra Energy used to pay a base dividend plus a special dividend, but in 2023, they did away with that special dividend and instead pivoted their focus to share buybacks in order to maximize shareholder value. At the time, they announced a $2 billion share buyback program, saying that they may use special dividends once in a while, but we're going to prioritize the buybacks. So now their quarterly base dividend comes in at about 22 cents per share for a dividend yield of 3.07%. Their ex-dividend date is March 13th for payment on March 27th. They just recently shared their fourth quarter earnings report on February 24th, where the company saw an earnings beat plus record production levels. And speaking of those share buybacks, they returned 61% of their free cash flow in the fourth quarter through dividends and buybacks, and 89% for the full year. That fourth quarter earnings per share came in at 49 cents, beating expectations by 6 cents per share, while revenue of $1.4 billion was in line with analysts' expectations. Coincidentally, they also come in as a strong buy with 19 ratings, breaking down to 17 buys and 2 holds. An analyst's average price target comes in at $35 per share, implying an upside potential of 32%. Looking at those recent ratings following that earnings report, a lot of them in the 20 to 40% upside range. Our low-end price target is a hold from a little further back with an upside of 4.7%, while our high-end price target is also a bit further back at $41 for an upside of 53%. For our fourth dividend stock, we have Dividend Royalty with Coca Cola. They trade under the ticker KO, currently priced at $70.73, having gained 21.4% overall in the past year and climbing over 10% in the last 3 months. I feel like Coca Cola needs little to no introduction as one of the most recognized beverage brands around the world. The first glass of Coca Cola was poured in 1886, and since then the company has expanded their line across soft drinks, water, sports drinks, juice, dairy, and plant-based beverages, with big brand names like, of course, Coca Cola, Fanta, Sprite, Minute Maid, Powerade, Aquarius, Dasani, Gold Peak, the list goes on and on. Coca Cola has over 100 years of consistent quarterly dividend payments dating back to at least 1920, and has been consistently increasing that dividend for 62 years. Their current quarterly dividend comes in at about 51 cents per share for a dividend yield of 2.74%. Their ex-dividend date is March 14th for payment on April 1st. And on February 11th, they shared their fourth quarter earnings report, coming out with both an earnings and revenue beat. They reported Q4 earnings per share of 55 cents, beating estimates by 3 cents per share, and revenue came in at $11.5 billion, growing 6.5% year over year and beating estimates by $800 million. And again, we have 19 current analyst ratings coming in as a strong buy, but it breaks down a little differently than the others, with 18 buys and 1 hold. With an average price target of $75.65, it implies an upside potential of nearly 7%. Looking at those price targets down below, on the low end we do have 1 hold rating at $65, which would actually be a downside of 8%, while our high-end price target comes in at $85 for an upside of 20%. If you've made it all the way to our 5th stock today, then this is a reminder to make sure you've hit that thumbs up button. Last but not least, we're looking at Amdocs. They trade under the ticker DOX, currently priced above $86 per share. Overall in the past year, they are down 3%, though they are in the green over the last few, gaining over 2% in the last 6 months and fairly flat in the last 3. Amdocs provides software and services primarily to the communications and media industries, essentially powering the technology behind how these companies deliver services like mobile networks, television, and internet by offering solutions for customer relationship management, billing, network operations, and more, often with a focus on cloud-based and AI-powered technologies, enabling them to manage customer experiences and operations efficiently across different platforms. Amdocs has been consistently paying and growing their dividend for 13 years, and over the last 5 years has a dividend growth rate of nearly 11%. And their current quarterly dividend is about 53 cents per share for a dividend yield of 2.18% and a payout ratio just over 29%. Their ex-dividend date is at the end of the month on March 31st for a payment on April 25th. They shared their first quarter earnings report back at the start of February. Earnings came in with a beat while revenue was in line with expectations. They reported Q1 earnings per share of $1.66, beating expectations by 2 cents per share, while revenue of $1.11 billion did fall year over year but was in line with expectations. The company did reiterate their 2025 target for double-digit total shareholder returns. And they just have 3 current analyst ratings but do come in as a unanimous strong buy, with an average price target of $103.67 for an upside potential of 20%, and those price targets down below fairly closely grouped here, low end being $100, both with upsides of over 15%, high end being $111 for an upside of over 28%. So that is a quick look at 5 strong buy dividend stocks, all with ex-dividend dates in the month of March. Let me know your thoughts on these companies and which one catches your eye the most. I always love hearing from you guys. And of course, please keep in mind that these videos are never a suggestion to buy or sell any specific stock. Please make sure you always do your own research and due diligence. Thank you guys so much for watching. Have a great day, and I'll see you back here next time.